Hello my fellow traders, my name is Martin Janson from Trade It Simple and this is our Q&A session. The first question from Novi. She asks about the current situation on Aussie dollar. So let's first have a look on the weekly chart. As you can see, the rate is currently testing a 14-year rising trend line, so technically I am flat here. For further downside continuation, I really need to see a break below the trend line, even better with a retest as the new resistance. On the 4-hour time frame, there is also no indication about further direction as the rate is still trading within a range. As long as we are trading above the 72 level, I wouldn't take any short positions here. On the top side, as I have mentioned before, I would like to see a break above this falling gap resistance at 0.75 before even start thinking of going long. One thing that now stands in the way of technicals, and not just here but with any pair, any time frame, is the current market sentiment with the risk aversion. I will be doing a whole separate video about this in the coming days, so I'm not going to go too deeply in this now. However, the bottom line is that if we continue to see a further backdrop in the risk markets, a real commitment to the risk aversion in equities, it will eventually jump over here and start pulling this pair down. Because although from the historical perspective the interest rate differential is very low here, these two currencies are still on the opposite side of the risk spectrum. Aussie is generally perceived as the risk asset and the US dollar is the safe haven, so we now have to keep an eye on that. Alright, Danish asks to help him with harmonic patterns. I've done short videos on the subject before, but let's do one live example right now. So, Euro dollar daily chart. I've already found a possible pattern here, so we'll first draw a retracement from the recent high to the recent low, and that will be our leg XA. As you can see, the leg AB is 78.6% retracement. Now for the sake of clarity, let's delete this. Now draw a retracement for the leg AB. We can see that the leg BC is 88.6% retracement from the leg AB. We know that in the bearish butterfly pattern, the leg CD is also 161.8% retracement for the leg XA. We have already drawn that, so we can expect that at this point the price will turn around. Well, this is a general way to look for harmonic patterns, so should you sell at this point? Again, let's just get it out there. I am trading based on price action and I would never ever sell anything like this. I mean, it doesn't get any more bullish than this. 4 strong up days and a breakout from the symmetrical triangle formation. I wouldn't sell this if my broker paid me for doing it. Of course, a completely different scenario would be a false break above 115 or a bearish engulfing pattern with a break below back in the triangle. But just based on a harmonic pattern, no, I'm not trading this. Alright, that's it for me today. Please feel free to leave your questions for the next Q&A session next Friday down in the comments below. I would also like to remind you that you still have a time to win 1 year of the Trade It Simple signal service. All you have to do is to purchase the Forex Basics course till September the 1st. For future updates, please subscribe to our channel. Good luck with your trading and see you soon.